Welcome to Lawyer Boss Life.
Welcome to Lawyer Boss Life, the podcast where law firm owners learn to build profitable businesses and lead lives they love. I'm Chelsea. I'm a law firm owner, entrepreneur, and toddler mom. I know it's possible to have excellent income, work 40 hours or less each week, and take time off because that's what I do. Today, we're talking all about KPIs. This is going to outline the 5 key performance indicators every law firm owner must know, plus a bonus one that I think you can automate and use with your marketing firm to help you understand where your leads are coming from. So think about it, right? If you were asked today, how profitable was your law firm last month? Could you answer that question in 30 seconds, a minute? Would you have to log on to your QuickBooks, shoot a message to your accountant or your bookkeeper and ask them what that number is? Most lawyers, instead of actually knowing their numbers, they measure busy, not profitable. And that's super dangerous because an office can be busy, but if you're not collecting the billables, if you're not understanding where your money's going and where it's coming from and why, then you can be on a path that doesn't actually work for the setup and systems of your law firm. So I'm going to talk about the 5 KPIs that matter most for firm health, plus, like I said, that extra little bonus factor and considerations for where you want to look at when it comes to marketing specifically. So I'll add that on at the end. So why do KPIs matter? These key performance indicators. Why do they matter? They're kind of like a dashboard for your car, right? You wouldn't drive without knowing how fast you're going, how much gas you have, or how much battery you have, depending on what kind of car you drive. You have to kind of know what's going on before you press start. And so without your KPIs as a law firm owner, you're pretty much flying blind, and decisions are made off of what your gut is telling you, not the reality of the health of your law firm. So I remember thinking that we were closing all of our prospective clients. And when I say all, I know that that's not 100%, but I felt like the consults I was speaking with, people were retaining me at a pretty high rate. And we weren't wasting time, doing all these consultations, not actually converting them into paying clients. And at the time, we were doing free consultations, 30-minute free consultations, which a lot of law firms do. And we were booked all week. I would say myself, maybe I had 10 consults. I have a business partner that would also have a high amount of consults. And I really believed that that was valuable time. But with the free consultations taking up a significant amount of our time during the week and taking us away from business management and billable time, we actually were losing a lot of time and only retaining less than 10% of the clients we were talking to, which to me was a shocking number. I went on Google and found out that that's not uncommon, but I just felt like we were throwing away a lot of time and money and not turning over these prospective clients who were calling us asking for help. So we made some changes to figure out what is going to help us have a higher conversion rate, which may mean doing less consults, but being able to turn those into actual paying clients at a higher rate than when we were doing free consultations. So now we charge for consultations. We charge kind of a discounted rate for 30 minutes or an hour. And we average around 65% conversion rate of those prospective clients. And so we have more time for billing and more time for business. But I had no idea. I just thought we're retaining clients. We must be doing well. Once I started to learn a little bit about what I didn't know, I did a deep dive into KPIs and learned really, really quickly that there was a lot I needed to get on top of. So let's get into it. So the first KPI I'm going to talk about that you absolutely need to know, and you should know fairly quickly, is revenue per matter or per client. So what is that? It's average revenue per client or case. And the reason why this matters is it shows which practice areas of your firm sustain growth and which are loss leaders. So understanding your highest value case is going to allow you to invest more time in fine tuning the systems of that case, marketing into that area of practice, investing more employees so you can take on more of those cases, depending on the structure of your firm. So, for example, I'm a partner at a family law firm, and it's pretty easy to guess that litigation cases are our highest value cases. They tend to take longer, more work is done, so therefore they generate more billables. Then from there, mediation is our second case, and then from there, it's prenups and postnups. But we prioritize things regardless of this number. We understand it and we know our average value per case, but we want to take on more mediation clients because we can help about 10 times more mediation clients than we can litigation clients, given the demand. And we can get through prenups pretty quickly. So even though per case they're not as valuable, we can turn them over quickly, which makes them valuable. So we understand this, even though, yes, if we invested more in litigation, those are our high value cases, and that might make sense for some areas of practice. But we know them and we know our average value per case so that we can adjust workload, the amount of employees we have working on those, and the systems that we invest. Additionally, depending on what type of practice you do, you're going to look at whether flat fees or hourly is more profitable for you. We've done flat fee in the past. We have some flat fee options now. And we're always kind of back and forth whether or not we're profitable. Some are not, some are. But generally speaking, hourly is where we're going to be. You need to understand, if you have multiple ways of billing within your firm, which one's more profitable. And you're always going to say that, well, I'm just going to take the type of cases that I take. It is what it is. But it's not, because there's always nuances in these types of cases, and how you market for those particular things can help you even create a niche for your firm. So you don't always want to just disregard the your revenue per client or per matter simply because of the nature of your practice. Look a little bit deeper. So as stated, we know certain cases aren't profitable, but we also want to take the cases we want. And as a business owner, you still have to find the balance between profitable, the type of niche you want to push, and what you enjoy doing. But again, you still need to know where those numbers are coming from. So now we move on to the second KPI. This is cost of client acquisition. And this is going to be a KPI that really involves a little bit of information from your marketing team or wherever you do your marketing, because cost of client acquisition is total marketing spend divided by new clients gained. And why does this matter? It determines if your marketing is working, right? If you're spending $10,000 a month on marketing and you're generating $20,000 in cases, it's a pretty tight return on investment. Yes, you can say, well, I'm still profitable, but that's not a pretty high margin. Marketing should not cost 50% of what you're making from that ad spend. So knowing this number helps you figure out if you're overspending on ads for clients that don't stick or aren't profitable for your firm. Additionally, it's going to help you compare where your clients are coming from. Referrals, Google ads, your SEO. You can break it down to know exactly where everything's coming from. How the cost of client acquisition impacts you directly ties into your profit margin. And so a low cost of acquisition or cost of client acquisition equals more breathing room in your profit margin, right? Gives you the ability to spend a little bit more sometimes on certain areas that you want to promote or look into, because you know that that ad spend is working where it matters most. So our marketing team would show us the marketing spend each year or each month when we meet with them, and ask us, what's your conversion rate? Do you know your cost of client acquisition? And I would just kind of be like, nah, I don't know. And I realized that once we really understood where our ad spend was going and which clients were retaining compared to somebody who just said they went to Google or somebody who got our name from another attorney or a former client. Now we know very specifically the percentage of clients that retain that are from those sources. And for us, we know that a percentage of marketing spend, even though we think is high sometimes when we look at it on paper, compared to the clients that we're retaining and the billables it's generating, is very reasonable. And it allows us to be selective with the clients we're taking and always have a fresh set of cases coming in for when those cases are finishing up. So this one's really, really important, and it's sometimes the hardest one to really nail down. So the third KPI is utilization and realization rates. So what is this? Well, utilization is the percentage of total hours that are billed, and realization is the percentage of billable hours actually billed and collected. And why does this matter? Well, some of this is obvious, but it shows productivity and efficiency by lawyers and staff. So I can look at an average week and say, okay, all of my employees worked 35 hours, might be 40, might be 35. How many hours did they bill in that 35 hours? To be able to understand how efficient they actually are, right? And then I'm looking at, well, of those billable hours, how much did we collect at the end of the month and how much is still outstanding, right? And some of this will tie into your overall collection rate at the end of the year and what's reasonable, which we'll talk about as well. But it's really understanding how can you maximize the hours your employees are sitting at the desk working on cases and translate that into not only billable hours, but collected billable hours. So many lawyers are busy, right? All day long, I'm working, I'm responding to things. But 50% utilization is actually fairly common, which to me as a business owner sounds shocking. So, how much time are your employees losing on admin tasks? And how many more people could you bring on to help maximize that other person's efficiency? Do you need to hire another admin to take on some of the admin jobs that the lawyer does so that they can focus on billing? Do you need to automate some more of your systems? Do you need to bring in AI strategies or outsource some of your day-to-day tasks? It could be all of those things. It could be one of those things. But if your realization is low, ask, are you discounting, right? Are clients refusing to pay? Is the reason you're not collecting not because your lawyers aren't doing the work, but simply because you don't have a good method for collection, or you're not feeling confident enough to bill your total time, so you're discounting your rate? A lot of things play into why your utilization and realization rates can be low or off base. So whatever it is for you, you really need to understand those numbers and figure out what's impacting them internally, because what impacts those numbers for me are not going to be the same for you, depending on practice, the team you have, and how you run your business. So when we talk about this with our team, we make sure they see what we can see and we show them the numbers, right? You worked 35 hours, 40 hours, you only billed 20. Where did those other 15 hours go? What are you doing? Sometimes we know what they're doing. We really have our team document all of their day, even if it's not billable, so that we can see what they're doing and adjust that accordingly. So if we give them an admin task, for example, sometimes I want my lawyer to do an admin task that's like a research project for the firm because they have a unique perspective on this issue. And I say, hey, put it in our admin billable so that I can see how much time you spent on it and remember that when I'm looking at your total time. Sometimes you're going to have those. That's okay. But I bet if you looked at your numbers, you would be kind of shocked by how much time is simply not being accounted for. So really take a look at this numbers. All right, number 4, collection rate, accounts receivable. I kind of just talked about this in realization rate. So this is the percentage of invoices actually collected. Why it matters. Revenue is meaningless until the money's in your bank account. So you really got to look at what it's costing you to have a 70% collection rate versus a 90% collection rate, because you could be talking about tens and even hundreds of thousands of dollars depending on your business. What is your payment plan, right? Knowing how you collect money And how you issue bills is the number one starting point for improving your collection rate. So, do you have monthly payment plans where everyone's depositing on a monthly basis? Do you utilize evergreen retainers? I can tell you right now, we utilize evergreen retainers, and that increases our ability to collect because the money is already there and accounted for. And what billing software do you use? All of these things are going to impact your collection rate, and you have to find what works for you. If your accounts receivable continues to grow, clients aren't paying, and your firm is now financing these cases, something that you are not required to do. I know some people want to, be available for their clients and do good work, but we are not a bank. And so really make sure that you understand your collection rate. I used to be really scared by our total accounts receivable, but then I realized our collection rate was pretty high, about 95%. A 5 to 10% loss of collections, especially in law firm, is kind of part of business, especially given how much we charge and the reason people are spending this money. But if you know it, sometimes it can alleviate that stress. So figure out your collection rates and look at your accounts receivable to really understand what's going on. Okay, number 5. This one's quick and easy because if you don't know it, you should. It's the one that you should be able to pull within 30 seconds of somebody asking you. That is, what is your profit margin, right? Profit divided by revenue. Is your firm profitable? Healthy firms should be around 20 to 30%. Really strong firms are going to be closer to 40, 50%. And it's a red flag if revenue grows but margins sink. That means you're spending way too much within the revenue that you're generating. We always thought we were overspending just because our monthly expenses were high, but we had the billables to support them and we were adding money to our buffer account. And when we looked at it, we're like, oh, we actually have a nice little nest egg if we want to do some of these investments or business strategies that might cost additional money out of pocket. So know your profit margin. It's an easy one to know. Your bookkeeper should have this ready to go. Shoot them an email or look it up yourself. Know this on a regular basis and it'll help drive decision making. So we talked about revenue per matter or per client. We talked about cost of client acquisition, utilization and realization rates, collection rate, and profit margin. The bonus KPI that I want you to spend some time getting to know for your firm is conversion rate. I know I talked about this at the outset of the talk of wanting to give you an example of why KPIs became so important to me. I thought our conversion rate was high. I was very wrong. So conversion rate is the percentage of leads who become paying clients. Easy enough. Why it matters. Intake is the gateway to growth. If you're not converting leads and bringing in prospective clients, then you're not generating revenue for your firm. That's how we make money as lawyers, right? So it's simple math. You do 50 consults, you have 20 hires, you have a 40% conversion rate. It's actually pretty solid when it comes to law firms, depending on the area of practice. Some law firms have a much higher conversion rate, the nature of their practice or how they get their leads. And some firms, specifically family law, tend to have less than 10% conversion rate, even though that wasn't good enough for me. Right? Low conversion usually is impacted by your intake scripts, meaning what is your intake specialist saying to the clients to get them scheduled? Then the consultation itself, how are you closing the client and getting them to understand the value of your firm? What's your follow-up process for closing that client? And your pricing. Are you priced too high, priced too low? But you have to know the conversion rate to be able to have these other conversations, because tracking conversion rate is really what's going to save marketing dollars. There's no point in driving leads if they don't convert to clients. Otherwise, you're wasting a lot of time. One tip I have is record your consult calls and review them with your team. We do this. So when people call from one of our ads, we can record it and see, are they booking or are they hesitant? And if they're hesitant, what seemed to be the reason? And this is just more valuable information. If you're operating on a day-to-day basis based on, just going through your system, plugging away, billables, sending out an invoice and collecting, you're operating on gut and comfort. but you really need to know these numbers, and conversion rate is one of those extra ones that you're going to find is very, very helpful. If you need help navigating your firm's numbers and better understanding your KPIs, visit lawfirmsuccessgroup.com. Numbers are not something many lawyers like to get too caught up in. So if this breakdown helped you get on track or think about things differently, I bet you know someone else who could find it helpful. Please share this with them, and don't forget to like, follow, subscribe, and leave a comment. We'd love to hear what's working for you.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.